Hey everybody, Chuck Gibson here from Financial Perspectives. I continue to get inquiries about investing in the emerging markets, so I thought looking at the charts may help provide some answers. We all know the compelling long-term fundamental story they hold, but we also know that fundamentals are terrible for making short-term investment decisions. For that, I prefer to look at the charts and see what they're telling us. So let's do it. The emerging markets have been an awful investment for the last 5 years. As you can see in the chart of their proxy, EEM, they have been stuck in a trading range since topping in early 2011, effectively dead money for those long-term investment allocators who have bought and held. You could see prices once again come back down to test the $32 black horizontal support level for the third time. Because this price has acted as support in the past, we expect it to hold again. The potential problem with this expectation is that the more times a price tests a level, the greater the chance it breaks through it. But if it does hold, it makes this a compelling opportunity. Clearly, like many other markets, we are at a crossroads, and its next move will reward those who get the direction right. If price holds and reverses higher, it would not be unexpected for it to go back up and retest the top of the channel, a 30%-ish gain from here. On the flip side, if price were to break down below horizontal support, the target here is the 2009 lows, some 40% lower. Doing a quick analysis, the risk-reward ratio as I have defined it is less than 1, meaning your risk is greater than your reward. For reference, we look for investments that offer at least a 2.5 to 3 times ratio and pass on everything else. So clearly, this is not an attractive opportunity. So what's an investor to do right here? Walk away and wait for another opportunity? Well, that's one solution. Another one would be to change how the position is managed. Instead of buying and holding, select a price that, if reached, tells you your investment thesis that this is a good opportunity was wrong and exit there. I have updated my original chart, adding 2 more logical support lines below the current one. The first, which is around $30, was chosen because if you look to the left, you will see price gapped up and consolidated at this level on its way higher in 2009. You can also see this price was also retested just recently early in July and held. The second line of support is the $26 level, where price gapped and consolidated on the way up in 2009. Either of these provide logical, objective, long-term exit points for investors who believe the emerging markets offer an attractive opportunity and want to take a shot at putting money to work now. In terms of which one to choose, well, that's a personal choice that I cannot answer. For me, I would only take a shot if I selected the $30 exit level because the risk-reward ratio is 4 to 1 and meets my 3 to 1 or greater requirement. Using the $26 level as an exit provides a 1.41 ratio, and that's just not worth my investment dollar. I'd rather wait for a better setup. Remember, it's about taking the best opportunities with the greatest return potential. To close, I hope everyone watching realizes this video is not necessarily about investing in the emerging markets, but rather trying to teach 2 important lessons. The first is you need to have a management plan created for each investment opportunity before you buy. As a part of that plan, you must ensure it meets both your profit goals and your risk levels. Secondly, I want everyone to recognize that virtually any investment can be a valid and legitimate opportunity depending upon how it's managed. Without question, one of, if not the main key to successful and profitable investing is having an investment plan and following it. As always, I appreciate your time and your attention and hope you found this video informative and helpful. Thanks to all who have provided feedback and questions. Please keep them coming. This has been Chuck Gibson from Financial Perspectives with a look at the emerging markets.